Welcome to the Times of Industry show. This is the most important show that I've ever produced in over 4 years of recording interviews online. I've got the most important guest right now for everyone. This is Lynette Zang. If you don't know, she runs a bullion dealership. We're gonna get from the source exactly what's happening with physical gold and silver right now. Actually, 20 minutes before we jumped on the air, Steve Mnuchin just announced helicopter money in the U.S. Every American citizen will get a check within 2 weeks. Literally, this is the most important video that I've ever produced. I'm glad to have Lynette on the call with me. Lynette, thank you very much for joining me.
Lior, I'm very happy to be here. And as far as what we do, we are definitely a physical metals house. And there are different kinds of metals, and we'll talk about that.
100%. Yes. Let me ask you something. I've made the rounds yesterday with a number of the biggest dealers in the United States. They've all said we're running low on inventory. In a couple of days, we will not be able to have no gold and no silver, or we're going to have to limit orders to $5,000, something that's very, very low. Obviously, with gold being 1,600 an ounce, that's like 3 ounces. And you know, I'm used to ordering when they tell you the limits are the minimums in Switzerland and elsewhere are like $50,000. So going to 5,000, you're talking about a 90% drop in what people can facilitate now. The silver mint, the U.S. Mint is telling us that they're out of silver. Lynette, let me give you the floor.
Yes.
You do this for a living. What's going on personally with ITM trading? Can you provide right now for customers, and then talk about the entire supply chain constraint?
Okay, absolutely, I can, because really it's not quite as similar as 2008, but in 2008, because we've been around since '95, we have very strong and long-term relationships with our wholesaler. So I just checked before we went on air, and we do not have any maximums that you can buy. However, we do have delayed delivery. So you can place your order, and our wholesalers will not allow us to sell anything that they do not know absolutely that they'll be able to get their hands on. You're just going to have to wait for it. And possibly through May, isn't that right? So till May, but you can still order it. And frankly, I think that you should, to be perfectly honest with you.
Now, okay, so this is amazing. So it will take 2 months to get your gold or silver right now.
But we saw that in 2008 as well. And then at that point, we were going out 3 months for delivery. So this is kind of a repeat of that. You know where I see the difference, though, actually?
Please.
The premiums for the bullion silver, the bullion gold are expanding even as the spot price is imploding. And it's not really imploding so much as compared to the stock market. Like spot gold went down 2%, I think to like 1480 or something like that last night. This morning it was a little bit more than 1500. However, it's gone down 2% versus 13% on the stock markets. And then also, you know, the oil market, well, we know what's going on in there, under $30 a barrel.
Which market is that?
It's oil market?
Which market is that? It's almost gone.
Oh, West Texas crude, the WTI market.
Yeah, no, I'm joking. I'm saying it's not even a market right now at this point. It's hemorrhaging.
It is hemorrhaging. So you're right. It is not a market, though vultures are going in to pick up the oil at these levels, and then they're going to go ahead and hold them in tankers. But, I mean, if Saudi Arabia wanted to do a knockout punch to the global economy in the middle of the coronavirus outbreak, they did a very good job. Because we've got so much debt that's coming due. And, you know, the price per barrel, I think Saudi Arabia needs something like $90 a barrel. I think Russia needs something like $45 to $48 a barrel. And the shale producers in the U.S. need between $48 and $54 a barrel. So with oil prices under $30 a barrel, I think everybody can see the problem that's going to happen.
Lynette, let's go back a little bit about May here. I want to make people
Yes.
understand: is this due to supply chain constraints, or just because of so much demand?
Demand. The demand has absolutely exploded. But you know what's also really interesting, Lior? I have the collectible coins, and the premiums on them have been like the lowest ever. They have not risen yet, but in 2008 the premiums exploded. So even though on bullion you need to wait until May for delivery, I'm sure that you can still, because I just checked with Eric yesterday on this, the lower quality ones, which are very close to bullion, closer to the spot market, you can still get. That for me is a better option, because as a collectible, they're in a different category too. And you're not paying that much of a premium above spot for these. So if you want earlier delivery, this is the way to go.
Yeah, the discounts that these collectibles were selling for in recent months were insane. I've never seen
Exactly.
such lackluster demand for these collectibles. So actually, that tells me that there could be much more demand for it in the coming days and weeks.
Biggest bargain on the planet.
Now, okay, Lynette, I want to ask you about helicopter money. Huge,
Yes.
just absolutely
Yes.
huge. Did you ever think that this would come in 2020?
No, I didn't think it would come in 2020, but I definitely knew that it was coming. And as soon as the outbreak happened, if you think back to 2008, that was about bailing out the banks, and they had plenty to do that. But they've used up all their ammunition. The coronavirus is about bailing out Main Street. And so, yeah, the helicopter, there's no choice about the helicopter money. They have to send a check to not every man, woman, and child, but to those that are in the gig economy, because they've been moving us in that direction where, you know, you don't own anything, you're working 3 different jobs, you have no benefits, you have no job security. And so, for example, like I get massages regularly, and I actually called my massage therapist. I said, I'm going to cancel everything for the next 2 months. But I know that she lives, you know, very tight. And so I said to her, but I was supposed to buy a new package on our next meeting, so I'll go ahead and buy that anyway. And she's like, you know, thank you, thank you. So yeah, the helicopter money, I knew this was coming. I didn't know it was going to be in 2020, but it had to be, because 2021 is when the LIBOR, they may change their minds on this, but when the LIBOR goes away and the new system has to go into place. So they have to also kind of ramp up for that too. Do you know you remember what I'm referring to? The
100%.
LIBOR is well, and maybe make sure your viewers understand it, because that's the interest rate reference rate that is tied to trillions and trillions and trillions of dollars worth of contracts globally. And because of the scandal that happened, that was first discovered during the crisis, but then the public discovered in 2012, well, it's not really a viable benchmark anymore. So they've been trying and not having very good luck with creating a new benchmark, a new market for that benchmark, and then converting all those trillions of dollars worth of contracts before the end of 2021. So, you know, look, there's a lot of people that are suffering, and this is really a big deal. There's no doubt about it. I mean, you don't shut down whole countries and states and tell everybody, you know, don't fly, don't go to restaurants, don't go to the theater, don't meet with more than 10 people if it wasn't, you know, serious. And I am not a conspiracy theorist. I have to prove everything. My nickname is Data Gal, so I cannot prove this, and I want to make that crystal clear. But it is kind of handy because even though we'll get over the coronavirus, the economic damage we will not be able to get over. So now it's helicopter money. So what's next? MMT, modern money theory, where they just print everything into oblivion. And that is a great excuse to not really have to deal with LIBOR at the end of next year, but to reset the global financial system into a brand new system. Because the old one, it's broken, it doesn't work, and they don't have any tools left.
Okay, Lynette, do you think that the IMF or the Bank of International Settlements, now that basically the Fed is out of the game, it can do QE, it can expand its balance sheet, but it's not going to consider negative rates. Do you believe that the IMF or the World Bank or the Bank of International Settlement will open a line of credit or just do a direct loan to either the Treasury or to central banks, especially the Fed,
Globally.
and blanket this entire thing with like a $10 trillion? Because on Monday, like a day before this interview, if the Fed hadn't dropped that bomb and gone into the repo markets with hundreds of billions, the entire credit facility would have been, yes, in the trillions. And not only that, but it seemed to me like the world could not have bought more treasury. It would have gone to gold yesterday had the Fed not intervened. You know, I want to talk a little bit about how this is all priced into the stock market, or is it not yet priced all the way fully? Are we going to the lows of the Trump, you know, the November 6th, 2016, the 1800s for the S&P 500? Are we going even lower? There are many, many speculators out there on what's going to happen. Do you feel that we're even close to a bottom?
No, I do not feel that we're close to a bottom. I just pulled a graph up when we were about, I think, 18% below on the S&P from the highs, and it was still like severely overvalued, like a price earnings ratio of 20, almost 28 times earnings when the average is 15. So, and I was there on Black Monday in 1987, and at that time you had blue chip stocks that were trading at 8 and 12 times earnings. So I don't think we're near a bottom now. Now, having said that, with all this helicopter money and all of this, these trillions and trillions and trillions of dollars worth of liquidity, you know, here's the thing about that. I would expect a V-shaped recovery, right? But what happened when he announced, when Powell announced 1.5 trillion on Sunday night, the markets went limit down. In other words, they dropped, all of them dropped about 7% instantly, where if they had any ammunition, if they were really effective in anything, they should have gone through the moon, because once new money's created, it has to go someplace. And that brings up, you know, that black hole, because where are all those trillions? And then on Monday, he announced an additional 500 billion. And we are now at a point, in fact, I just was looking at it this morning, where all the promises in the repo market, look at them. It is QE to infinity. They are prepared to create as much new money as the banks are demanding, as the hedge funds are demanding, as the larger corporations are demanding. And it'll be so interesting to see what they're coming up with for the little guy. Yeah, they're going to send a check, and I listened to the whole thing this morning, and they said it's going to be bigger. Of course, President Trump always has a tendency to do that. It's going to be bigger than anything we've ever seen. Well, Hong Kong just recently did that and gave each citizen about $1,200-1,300 bucks. And so is this going to be on a monthly basis? It's like, exactly are you going to do it? Are you going to do this and then also eliminate payroll taxes? Because they say the problem with payroll taxes is then it gets into their hands quite slowly, versus doing a check that, you're absolutely right, is going to be sent out within the next 2 weeks. So we'll know a whole lot more about that by the end of today. But this is what I've been saying all along. When it gets too expensive to keep this game going, they will stop. As long as this game is about protecting the elites, so the bankers, the heads of the large corporations, etc., then they'll keep doing it. But now it's really about bailing out Main Street. And you got to keep in mind, on a global basis, you already have this massive pension crisis. Fidelity, the middle of February, Fidelity came out with this study saying there are more $1 million 401k owners than ever before. Well, I'm thinking that number is not so high anymore, because they were really counting on stocks continuing to grow to the sky and never have a consequence. So I'm thinking the market from last week had another 40% drop before it was even fairly valued. And quite honestly, in trend cycles, things always go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. So, it depends on how much more ammunition like the plunge protection team will have, how
Lynette,
much impact, because this is going to push us into the hyperinflation. Not one little teeny weeny doubt in my mind.
wow. Okay, hyperinflation. That's a big word, and I'd love to ask you more about it. Before I do, I want to ask you if there's any potential in your mind in 2020 for us to see social disorder in America or in Europe or both.
Absolutely. And some levels, we've actually already seen that at the grocery store. I've heard stories of women fighting over toilet paper, and every man for himself, every woman for himself. This is really more the time to come through as community. But it is also an opportunity, and I really want to put this out there, because you and I have talked over the years. So this is something we've been talking about for a really long time, but it's been very hard for people to believe that this could happen. So what I think is likely to happen, what this is this is a taste of what a real financial crisis, this next financial crisis, is going to look like. And, I don't see as many people coming together in community as I would personally like to see, but I think everybody needs to look at what's happening and believe it, so that if they haven't gotten prepared with food, water, energy, security, barterability, wealth preservation, community, shelter, those are the things that no matter what's happening in the economy, we need to feel secure that we have those in place. So do I think that this piece is going to, pass? I mean, I think global central banks are going to print us into oblivion. So for a minute, when the fear of getting the virus and all of the deaths passes, then people are going to leave their houses again and start to live a more normal life. And the reason why you see my hesitancy, because I've been thinking about this for myself. I'm a very busy woman, and what I have a tendency to do is add things on my plate without taking anything off. So just more and more and more. But because I am really hunkering down, I've taken a ton off my plate. How long they're going to be off my plate is in question. I don't really know. But will I have the opportunity to create new habits so that when I actually do go back into, and we all go back into normal society, are we going to value some of the things as much as we valued them before we went through this crisis? Am I going to reload my plate up as full as I had it before? Or am I going to think about other choices, because I'm now learning what I can and cannot live without?
Sure.
See what I'm saying?
Yeah. We live in a new world. I've been saying that for days. This is a new world. So many things are going to change personally, globally. I don't even have the time to really contemplate all of this yet, to stop and think about, because everything's moving so fast and you have to make
Oh my God,
large
yes.
decisions. I want to ask you about something that you said midway through your answer. Do you think that this is not the financial crisis? So this is going to
No,
be
I
taped
think
over,
this
and
is
then
a
there's a bigger one coming, in your opinion. What?
yes,
Okay.
absolutely.
Okay. Let's
We're
talk
in a
about that.
liquidity crisis. We're in a liquidity crisis because the trust is gone. But the financial crisis comes when the debt bubble fully pops. Now, we were warned about it December 4th, 2018, when the yield curve inverted the first time in the US. It's been inverting in other places around the world anyway. But that foretells of a recession typically within 12 to 18 months. And here we are. I mean, no, this time it's not different like everybody wants to think that, well, it doesn't matter anymore. Yes, it does. So actually, I think that they're throwing the kitchen sink at it. And global central bankers are throwing every bazooka at it. They're throwing everything at this. So that's going to reflate. I mean, at some point, when the banks have as much as they want and the major corporations have as much as they want, all that money, that new money that they're creating out of thin air, but based on debt, yeah, I do think that we're going to see a reflation trade. Venezuela, since 2012, they've had the best performing stock market on the planet every single year, but their currency has no value, so it's just nominal. And in the fiat money, so government-based money, there's no value there anymore. You can go on the websites, you can find out for yourself, and that's even officially. Forget the reality, but inflation is baked into the cake. So if they have no room to lower interest rates anymore, I mean, I don't really, I'll put my neck on the line here. I have no problem with that. We will see negative rates in the US. We're at zero. And this crisis, this liquidity crisis is not over yet. And there's the real estate that's going to be coming up. Right now, people are running to an overvalued real estate market, but it's severely overvalued. And that already has cracks in the armor. So they'll reflate. I think the stock market, I mean, when they create the new money, it has to go someplace. So that's where, yes. So I don't think this is, I think that this is the death knell that they cannot overcome. But I think that, I hope that, frankly, that all of their money printing and all of their schemes can generate a little bit of peace so that those people that did not prepare for it beforehand can get prepared. I mean, you know, you have challenges getting money out of the ATMs. There are some controls that they've been putting on since 2008, and the rules that they've been putting on since 2008 that are now being tested. Experiments like the ETFs and non-managed money. I mean, these experiments are now being tested, and from what I can see, frankly, they're failing. But you know, the court of law doesn't really care whether or not you, John Doe, get hurt. So they only care about the contracts that you agree to, which is what makes physical gold and physical silver so critically important, because it's out of that system. I personally, because of my background with my Uncle Al, who was a major antique dealer, and I'll never forget it, because I've been in these markets on some level since I was 10 years old. And it was 1964. I remember it like it was yesterday. And my parents and I were at his house, and he took us into this back bedroom, and he had these two huge floor safes. And he said to my parents, if anything should happen to me, Aunt Bertie will be well taken care of the rest of her life because of what's in these safes. So I turned around to see what it was. And you couldn't fit one more pre-33 coin in there. Not one. They weren't slabbed. They were raw. If I had to guess, conservatively, he was probably holding, well, 3 monster boxes per safe anyway, easily. So that'd be at least 3,000 ounces of gold, but probably even more than that. And it was illegal to hold more than 5 ounces of gold at that time, except the way that he was doing it. So for me, I do not personally, I own silver bullion. That's fine. I'm not worried about a confiscation, but desperate governments do desperate things. And even recent history, like, India and Venezuela and other places as well, recently have confiscated gold from the population. Why would you think they wouldn't do it again? It's been done 3 times in this country, even though people don't realize it, not just 33. So why would you think they wouldn't do it again?
I this is the last thing I want to ask you about, the gold silver ratio, Lynette.
Yes,
120 to
ridiculous.
1. Okay.
Yes,
So is this a buying
yes,
opportunity for silver, or is
100%.
this okay? This is your
100%. Yes, it is,
would
but
okay.
not as a trade.
Let me throw a curveball at you. Would you
Oh,
sell
good. I
some
love those.
gold in order to buy silver?
No, I would not do that. But let's face it, the spot market in silver is something, when I looked earlier today, like $12.60 an ounce. I don't think you need to sell gold in order to buy silver at that really ridiculously stupid price.
Yeah, it's even lower than production.
Exactly.
Yeah, it's in distress. It's definitely in distress. Look, what
And
I've been.
and
Go ahead.
I'm sorry. I'm sorry. I'm so excited. I'm sorry. Because really, when you look at, like, let's take yesterday, for example, where you saw all the markets implode roughly in the US, roughly 13%. Silver followed suit and was down about, I think, 11 or 12%. Gold was down, spot gold was down 2%. So part of what the question is, well, how come silver is behaving so different from gold? Because that's what creates that divergence that you're referring to in the gold silver ratio. But silver is also highly thought of as an industrial metal. So with a global slowdown, then there would be less demand for it at the moment. Whereas gold is primarily, even though it's used across every area of the economy, including in manufacturing, electronics, etc., but it is primarily, it's the primary currency metal. And this really is all about currencies and fiat currencies. And fiat is government. It's by decree. So it's government-based currencies. And there's no value left in them officially. And they have no interest. I mean, how far below zero? Europe and Japan and all those guys, they've been testing it for a while. Negative rates don't work. They don't work. Of course they don't work. Why would you loan somebody money that you don't even know and accept back less than what you loaned them?
Lynette, I want to ask you about the last bombshell for this interview. China has just announced that it's expelling any U.S. citizens working for the New York Times, the Wall Street Journal, the Washington Post, the Time, and Voice of America. Never, ever has this been done. This is like fresh. 50 minutes ago, this was out. What is this? Because obviously Trump has called this the Chinese virus for the past 2 days. Is this retaliation, or is this deeper than that? Some people have speculated that because of 5G originating or not originating, piloted in the area where the wet market that originated the virus, that 5G had a lot to do with it, and Huawei had a lot to do with it. Talk a little bit about this relationship between China and the U.S., because obviously, if there's a problem between these two countries, we're going back to the we're going to get back to the caves.
Well, look, there has been a problem. It was in the early 90s when the Chinese yuan was pegged or connected to the US dollar, but we're now in the great unraveling. And really, that's what's been happening through the trade wars. But China is really out to control absolutely all information coming from that country, as well as all of their citizens. I think we are all living under a surveillance economy these days with cameras all over the place and everything being tracked. But China takes that to the extreme. So with President Trump calling this the Chinese virus, well, China's not going to like that because it doesn't then portray them the way they want to be portrayed. So quite frankly, not a big surprise. I'm kind of surprised they didn't do it sooner, if you want to know the truth, because they want to control the discussion. They want to control the image, and they want to control their population. And that's another warning to all of us when we look at what happens when all of your life you live it with intangibles, and you're living it online, and you're revealing everything, and you're giving away privacy and control. I'm not saying we go back to cave times, but I'm saying that we need a balance between things that are online and things that are offline. Because as freaky as this has been, and honestly, I've been in these markets since 1964. I was there on Black Monday. I was there in 2000, the NASDAQ bubble. Never, and 2008 certainly, never, ever, ever have I seen the behavior that I'm seeing today. But never, ever, ever have we lived through, anybody that's alive today, because the last time this happened that was World War I. So that was the early 1900s when we went into a completely new currency system. And to go back to something that you said earlier about the IMF, the International Monetary Fund, yes, those are the global lenders of last resort. And their currency, the SDR, which is a composition of everybody, well, right now, 6 currencies, the US dollar, the yen, etc., they can expand that to include all currencies. And that is where I believe, we'll see if this is right. I'm going to be right or I'm going to be wrong about it. But why reinvent the wheel when you already have one in place? And the SDR has been in place since 1969 to take over as the world reserve currency. So yes, I totally think the IMF is going to ride in on their white horse because, hey, they don't have to create debt in order to create this money, unlike everybody else who has to do that. And this is a debt bubble, right? They just push a button and voila, you've got as many SDRs as you want. But that is an easy way to transfer that power. And if everything can then be held in digital form, including the title to any equity that you have in your house, or I don't know if you're going to have anything much in if you have any stocks by the time this is over. However, if you hold all of your equity on your phone, and believe me, perception management, managing how you perceive things, they get you to spend that voluntarily, voila, then, you've just got this small group of people that own everything and everybody else that rents everything. And that's the direction that they've been talking about going in for a long time. And to tell you the truth, I believe them because their actions support their words. When their actions don't support their words, I know they're lying. But when their actions support their words, I know they're telling the truth. And that's what they have in mind for us.
Lynette, I can stay here all day long and ask you more and more questions. I know you're busy. I want to ask you, for the benefit of our listeners, how can they get in touch with you or your team and discuss gold, silver, and the rest of it?
All of this. Well, yeah, because Lior, what makes us different than the normal just bullion dealer is that we execute a strategy, and it's I've been studying currencies since 1987. So it's a strategy that I developed for myself, and it's all based upon repeatable patterns. Because even though I can't guarantee what's going to happen tomorrow, that is way not in my pay grade for sure. However, my feeling is if something's happened the same way every time, 4,800 times, and we're doing the same thing, we're going to end up with the same result. So you can get a hold of us and learn more about the strategy by calling, and the strategy does involve physical gold and physical silver, but it's customized to your circumstance, your goal, and what you have to work with. And it includes cash as well. I will tell you that. You want to get some cash out of the system. And people have been finding that a little bit challenging. But they can call us at 888-696-4653, or they can go online to itmtrading.com. And I have a YouTube channel. We have a YouTube channel, I should say, where we're putting out information, well, gosh, 4 days a week these days, and then even more than that. So keeping you informed, because we are super keen on education. That is critically important to us. So we'll help you understand what's going on as well.
Lynette, thank you very, very much. And let's definitely be in touch as soon as we can for another edition of this. You're looking great.
Absolutely.
I love your optimism.
Well, look, again, it's a repeatable pattern. There are always opportunities in crisis, but you've got to be in the right place at the right time with the right asset. And so that's all, that goes into a whole nother conversation, but there's only one asset, well, two assets, I'd say, that are absolutely severely undervalued right now, and that is gold and silver. Physical, not in digital form. Physical that you hold and you own outright. This is the opportunity to buy them at these bargain levels. And I do it. And
there are only two assets that are undervalued and only one, Lynette Zang. Thank you, Lynette Zang.
thank you, Lior. It's great talking to you again.